Hi everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a Form 8K filing from Apollo Asset-Backed Credit Company LLC, and trust me, it's not as boring as it sounds. Imagine getting paid just for owning something. Well, that's essentially what this report is about, but with a lot more numbers. Basically, this report tells us about the distributions or payments that Apollo Asset-Backed Credit Company is making to its shareholders. Think of it as the company sharing its profits with the people who own a piece of it. This event happened in late March of 2025. So what exactly did they announce? Apollo Asset-Backed Credit Company declared distributions, which means they announced they're going to pay out some money on different types of their shares. They have different series of shares like Series I and Series 2. And within those series, they have even more types of shares like AI shares, E shares, and so on. It might seem confusing, but it's just a way for the company to structure its ownership and payment plans. Now for the money. This is where it gets interesting, and thankfully the filing gives us a handy table. Let's quickly look at some of these numbers. For Series I, the AI shares got €5D9 $4 shares. You'd be getting almost $25 $2 Series 2. The AI shares, they got 0 per share. Remember, these are just examples, and there are other types of shares with their OA shares in Series 2 got whopping $0 shares. You'd be getting almost $2 The E shares in Series 2 got whopping $bond CD902 ZAT. The E shares in Series 2 got a whopping size a little more than Series I. The E shares in Series 2 got a whopping null, and Series I, the E shares in Series 2 got a whopping $3902 per share. Remember, these are just examples, and there are other types of shares with their own payout amounts. Okay, so you're excited about getting paid. When do you get the money? Well, if you were a shareholder of record, meaning you officially owned the shares on March 31st, you were in line to get paid. The company planned to pay these distributions around April 28th. Now, here's a neat option. The company offers a distribution reinvestment plan. Instead of getting the cash, you can choose to use that money to buy more shares of the company. It's like taking your winnings and betting on yourself again. This is a common feature for companies that want to encourage long-term investment. Now that we've gone through the nitty-gritty details, let's step back and look at the bigger picture. Is Apollo Asset-Backed Credit Company doing well? Are these distributions a good sign? Well, the fact that they're paying out distributions at all is generally a positive sign. It suggests that the company is profitable enough to share its earnings with its shareholders. The different payouts for different share types are also interesting. It shows that the company has a tiered ownership structure, likely with different levels of risk and reward associated with each share type. However, without looking at the company's overall financial performance, such as revenue and expenses, it's hard to say for sure. Are these distributions sustainable? Are they growing over time? These are questions that would require a deeper dive into the company's financials. Still, based on this report alone, we can say that Apollo Asset-Backed Credit Company is at least sharing the wealth with its shareholders, which is always a good thing in the eyes of an investor. So what's my take on Apollo Asset-Backed Credit Company based on this filing? It's hard to give a full assessment without seeing the full financial picture, but here's what I can gather. In terms of strengths, the fact that they're consistently paying out distributions is a positive signal. It shows they're generating profits and are willing to share them with investors. The distribution reinvestment plan is also a smart move, encouraging long-term investment and loyalty. However, there are also some potential weaknesses to consider. The complex share structure with different payout rates could be a bit confusing for some investors. Also, we don't know if these distributions are sustainable in the long run without examining their overall financial health. Overall, Apollo Asset-Backed Credit Company seems to be on a reasonable course, rewarding its shareholders with regular payouts. However, potential investors should definitely do their homework and examine the company's financials thoroughly before making any decisions. Thanks for watching this episode of Corporate Decoder. If you found this breakdown helpful, give us a like, leave a comment, and subscribe for more easy to understand corporate analysis. Until next time.